What's going on, people? Back with a bang. This is the Money Management, back here to bring you guys a new video today. In this video, we're looking at 5 different stocks to buy in July 2021. And to be honest, with all 5 of these stocks, you can buy them in July, but I'm sure if there are further sell-offs, later on in the year, you could still look at potentially buying them then. But the specific reason I'm making this video right now is because I think they're all at good price points to buy, and even if they're not at the ideal price point to buy, by the next couple of weeks, they will be at least at some point. So we're going to go into all those stocks in a second, but you guys know the drill. Before we get into that today, let's drop those thumbs up, people. It's a new month, it's a new day, it's the second half of the year. Let's drop that thumbs up, let's start in a good way. Also, if you're new around here, make sure you guys subscribe to the channel, hit the red button below for more videos like this. Now, I also want to clarify, all 5 of these different stocks are in different sectors. I'm pretty sure you guys know what kind of sectors are going to come up, but there's something there for everyone. Different price points, different sectors. You guys can look at what you're interested in. You guys can choose based on what you like, what sounds good to you. Now guys, all these stocks I mentioned today are just based on my own opinion. I'm not telling you guys to go out on there and buy them. You do not have to buy these stocks because I'm mentioning them. Also, all of these stocks have the potential to fall down. A lot of them have recovered from previous lows of the year, but they still have the potential to fall lower. So please be aware of that before you go and buy anything. Make sure you guys do your own due diligence, the usual stuff as always. But let's jump into it. Number 1, XPEV, ticker symbol XPEV. So this is from the Chinese EV sector, so specifically the electric vehicle sector. So today they actually announced their sales numbers for June, and they announced 6,565 vehicles, and that their deliveries are up 617% year over year, and the Q2 deliveries are up 439%. Now this stock has sold off recently very heavily. In the middle of May, it did sell off pretty bad around May 13th. May 13th, there was a lot of stocks that sold off, but since then it's filled the gap up. Now there's still about 14% potential growth room to run to back up previous highs, but I'm telling you guys, this stock is one not only for July, to be honest, it's one to buy and hold going into next year, the next 5 years. I think they have a solid potential, even a little bit further out than that. You do have to be wary though, because right now there's a lot of positive news around XPEV, around the Chinese EV sector, and of course we know about NIO. We could call it, XPEV's sibling, the brother, whatever. But one thing I want to highlight is XPEV does have a very bright future, but right now the company is not actually making any money yet. So that is one thing to take into consideration. Also, let me just clarify, their June delivery numbers was their highest ever month. So that's positive news for them again. And the EV sector throughout the world, but especially in China right now, is booming. There's a lot of good news about it. There's a lot of positive vibes about it. So you want to look at, stocks like XPEV, also NIO, Li, because these stocks are going to be eventually coming to America and other parts of the world. But right now they're focused in China, and again, they've not made any money yet, so it's still work in progress. But over the coming years, again, I see a bright future for a lot of these. You've got to remember that Tesla was one of the first ones out there. You've got other EVs still building up right now, Lucid Motors, but prepare for the XPEV takeoff as well. Mid-February, January, when it really rallied, we saw it go up really high, and since then it's still got a lot of room to recover. But over the past 3 months, it's up 21%. Today actually it sold off after the good news, so I don't know what happened there, but today that was actually a pretty bad day in the market overall. But yes, XPEV is definitely one to watch out for in July 2021. 2, Southwest Airlines, ticker symbol LUV. So I'm pretty sure you guys also knew an airline was coming on this list, and yes, the one I've chosen is Southwest. Now, I could have probably chosen any of the airlines out there, American Airlines, Delta, Boeing, but I've chosen Southwest. And the reason being because Southwest has about 20% potential recovery to get back at the all-time highs. And you've got to remember that a lot of the airlines sold off last summer heavily, and they started off this summer kind of doing the same thing. Now, I believe with a stock like Southwest, at the current price point it's sitting at, and to be honest, with a lot of the other airlines, it's going to be one of those that you look back on in 6 months, maybe 9 months to a year, and you say, I wish I had bought last summer. Because right now, to be honest, the recent period it's been making lower lows and lower highs, and I'm not sure why. I feel like now towards the second half of the year, towards Q3 and Q4, that is where we're going to see the breakout. If you look back at the chart over the past 9 months from October till now, Southwest has been on a steady uptrend, but of course suffering pullbacks along the way. Right now we're in a period where it's pulling back pretty hard. Again, recent weeks it's been making lower lows and lower highs. But I just feel like the point where we're at now, you can buy it. Yes, it might still dip lower, but overview, to zoom out, look at the whole context of things, those long-term gains are coming. It's going to continue to rise steadily. I don't think that this is one of the stocks where you look at it and you say, this is overvalued. I do think this is one of the stocks you look back on and you're kicking yourself again because you've missed out buying it in July 2021. To me, it makes no sense why airlines are in this weird period of time where they're still selling off, because yes, of course, traveling right now is not the best, but think about how traveling is a lot better than it was a year ago. It's also getting a little bit better. If you've traveled recently, you'll know it's getting a bit more structured. Yes, it's not ideal. Yes, it's not exactly what we're used to. It's not the same as it was 2 years ago, 3 years ago, of course, in the past, but it's coming back. Again, since summer last year, most of the airlines I'm pretty sure have doubled up since then, with the price points where they're at since then. But I do believe below the $54 mark, $53 mark, you're getting a bargain here, even though they have recovered a lot since 9 months ago, a year ago. Southwest, I don't believe you go wrong with it if you buy and hold long term. You can also swing it nicely. Yes, it's going to have those pullbacks like I mentioned, so you can buy put options on it, you can short it. But in regards to starting a position in the near term, Southwest is definitely one I've been eyeing for a while. You guys have heard me talk about it, and so that one is definitely one to keep on your radar. 3, Bank of America, ticker symbol BAC. So I called this out a couple weeks ago when it was sitting around $38, and since then it's rallied up to around $41. Now, just like the travel sector, this is one sector, the banking sector, the financial sector, which has been hit pretty bad. And also just like the travel sector, Bank of America has been on a steady uptrend since around October periods, with dips along the way. And on the recent dip, if you compare it to similar patterns in the past, well, this looks like it could be a potential buying opportunity. Now, I do want you guys to remember that yes, the travel sector got hit bad, yes, the financial sector got hit bad, but when it comes to stocks like Bank of America, people are still going into consumer debt, people are still spending money online, people are still using their Bank of America cards. Yes, they've let off quite a lot of employees, but you also got to remember Bank of America do have a dividend that they pay out. So when you're weighing up the different statistics on why a stock is doing well, why a stock is doing bad, well, I'll tell you this, that Bank of America did increase their dividend payout to about 21 cents. So that's a positive sign. Again, a lot of households in America are still using Bank of America for different things. Either they work there, or they have a checking account there, or they have a credit card there. Bank of America has been hit hard during the pandemic, but it's still making money, they're still succeeding. If you look at their Q1 earnings, it was actually pretty positive. Revenue was up year over year, net income was up year over year, diluted EPS was up year over year, net profit margin was up year over year. Their past 4 quarters, they beat earnings. And I do believe when they report Q2 earnings of 2021, we'll see good results. Now, Q2 earnings should be on the July 14th, so look out for that. If you want to play the stock leading up to earnings, you can do that. But if you're worried about a sell-off at earnings, then don't trade it, or at least, trade it from now until maybe a few days before. But Bank of America, one, sitting at a price point where you can look and say, yeah, I could get in at this point. Personally, I'd love to get back in at the $38, $39 mark where it was, pretty much beginning of last week. But at $41, I don't think you can go wrong. Buying and holding long term is the way to go with this one, so keep your eyes out on this one as well. 4, Ark Innovation ETF, ticker symbol ARKK. So this is the only ETF on this list, but it is one that I bang on about a lot of times. Cathie Wood's Ark Innovation ETF. So I'll start by talking about this, funny enough. Last month I think maybe it was end of May or middle of May, when ARKK hit just under $100 per share, Jim Cramer from CNBC said the Ark Invest phenomenon appears to be over for now. It's pretty clear that the Ark Invest phenomenon is no longer in play. And that's funny because today ARKK actually hit a new 4-month high. It's been up 21% since then. And yeah, it's trading at just under $130 right now. So despite all this, it's still around 17% lower than its all-time highs. And I just do believe that under $130, you're still getting a good ETF at a nice solid price point. So there are a few stocks you might recognize that are in the top 10 holdings of ARKK: Tesla, Zoom, Square, Spotify, Shopify, Coinbase, Roku. All of these, TDoc as well, all of these are in the top 10 holdings of ARKK. So I don't know the exact weights of these, but I'll probably put it up on screen so you guys can see, how much, they weigh in the portfolio. But this is a solid ETF if you want to invest in something long term. Again, I've been talking about it since $100, just under $100 when it hit 99 something a few weeks back. And since then, it's just been on a steady uptrend. It's continuing to make higher highs. It's continuing to steadily uptrend. It doesn't have horrible days. It has some bad days, of course. But overall, if you zoom out, look at the bigger picture, it's doing what it's supposed to do as an ETF. Consistent gains, consistently trending upwards. And if you think you're too late with this stock, well, actually, if you look back at the first half of the year, the past 6 months, it's been a pretty choppy period for ARKK. So no, you're not too late. Just look back at what's been happening over the past 6 months. It was at $130, it was higher than $130. It's sold off since then. It's obviously starting to recover again, but you're still in good time. It's still at a good price point for you to start looking to invest. 5, Tattooed Chef, ticker symbol TTCF. So this one is sitting around $21 right now. It was at around $16, $17 about 5-6 weeks ago, middle of May, and that was really the time to buy it up. But don't worry, if you're wondering, is it too late? No, you're not too late. Now, when it comes to Tattooed Chef, this is probably one of my favorite stocks around. I'd say from this list, it's probably my favorite, most enthusiastic about. They have a good business model, they have an understandable business model, and it's one which probably has the most room to run right now. Maybe XPEV, but yeah, Tattooed Chef is at a solid price point. So this is a company I've made multiple videos about, and it's one with a great product, a bright future, a great management team, a nice structural business model, and one I'm still enthusiastic about. So Tattooed Chef has, recovered from the $16, $70 lows a few weeks back due to the heavy buying power. And I think if you really know about the food industry and you know about Tattooed Chef, you don't miss out on this one around $16, $70. So $23.34, that's the kind of mark where I'd say, okay, if it's higher than that, I don't want to buy anymore. And also, ironically, if you start getting past $23.34, I think we see $24 very quickly, and that's when we can start to see the uptrend. I don't think that this stock will get there that soon, so you're in luck. You can still look around, see how it goes for the next few weeks. But during July, if you can get this one at $20, if you can get it slightly under if possible, I'd definitely say start looking into that. I saw an announcement last week that they were launching in Kroger, which deals in fresh food, and that helped push the stock up a little bit. But overall, I think in the next 2 weeks, we may see it back at $24. You also want to take note that there's a 30+% short float on Tattooed Chef. So again, do keep that in your mind. You might see a few weird movements with the stock. That is what happens when there are shorts on these kind of stocks. But I think eventually these short sellers will get cooked. It's a company that is undervalued, got an understandable business model. They're in a growing industry. Also, you've got to remember that their management actually have values that align with us, the investors' values. Also remember, Tattooed Chef still has a lot more potential, in the future. They're starting to move into more stores. They're becoming more known. Again, they've got great products. They're financially stable. Their industry is growing, and their stock price should start moving soon. I do think this is probably the most undervalued stock from this list. Again, I've been talking about Tattooed Chef for a while now, so I'm excited to see it hopefully start moving it soon enough, but that's one to look out. And if I had to pick one from any of these stocks for high growth long term, I'd probably pick Tattooed Chef. Also, I do want to say again, none of this is financial advice. This is just entertainment. This is just information you guys can listen to, my thoughts, my opinions. Be aware that it's still possible that we come back in a year and all these stocks have halved since then. I mean, I highly doubt it, but it's a possibility. Overall, thank you guys so much for watching today's video. Hope you guys enjoyed seeing these 5 different stocks. Again, they all have high growth potential going into the second half of 2021, the third quarter, and the rest of the year. Again, please guys, make sure you drop that thumbs up. Also, make sure you guys comment on the video, let me know your thoughts. Also, if you can, share this with a friend who's maybe looking at what stocks to buy come in July, maybe for the near coming months, stocks to watch. All of these are valuable. All of these can be swing trades, or you can trade options on them. It's up to you. And yeah, that's pretty much it from me. Hope you guys have a great trading day. Enjoy your Friday. Thanks a lot for watching today's video. That's it from me. I got to making. You've got stocks to be researching. See you guys next time for another video. Peace.